In today's video, we're talking about our technical analysis levels for the SP 500, Nasdaq, Tesla, Bitcoin, AMC, gold, and more. Yesterday had some pretty wild moves in that, especially in cryptocurrencies. The question is, can we make an all-time high today for the SP 500? Stay tuned to find out more. Alright guys, well it's time to begin our recap for the markets for June 8th and of course our look ahead of what we expect for the rest of the week together. And first off, we always start with the S&P 500 heat map with these large companies in it, and you can see Amazon and energy were some of the standouts yesterday. When we actually break down the actual indices, you will see that the story between the heat map and the story of the actual smaller cap companies is completely different. IWM, the Russell 2000, out with 1% gain yesterday after its big breakout session. This is a pretty big gain, and you can see that the money is flowing into the hyper stocks. It's flowing into the smaller cap companies as people seek growth again in this market. Energy and XLY, consumer discretionary, both out in front here for the actual sectors, and the only ones that were doing poorly were the defensive sectors, XLP and XLU, that's utilities and consumer staples. Makes sense, they're usually a later bull cycle kind of event, and of course we're not in a late cycle yet in this market, so expect them to still underperform for quite some time. When we're talking about earnings, we still have earnings this week for GameStop, Squeeze, Players, of course that is happening here Wednesday after the close. That's going to be very, very important. We've also got Chewy a little bit later on the week, and you always want to have something like earnings whispers if possible. As I've mentioned several times in our videos as well, and the community, we've been discussing this, we believe that there's a movement here from goods towards services. So if you're finding service companies and you're looking at them and you're thinking they're pretty good, I definitely think service companies could be something that's going to grow, and we saw the jobs numbers go towards that area. It's common sense. We're opening up. People have bought a lot of stuff and now they're going to move to enjoy life. Now, this has been the play in the markets, but I think it's going to continue to be a thing now for the next 3 to 6 months. When we start looking at the technical analysis, we always start off here with the dollar index. This is, of course, the world hedge, the world currency currently, and does it give us any direction? I think it's very tough to figure out where we are. If I'm looking at this, I'm thinking support has become resistance and some shorting for the dollar index is in order. However, I always say check the larger timeframes. We use the top-down approach here on the channel, and the reason why is because you want to be able to always spot this. This is, of course, a long-legged series of long-legged dojis on the weekly. That means indecision. So realistically, the dollar index currently isn't giving us much thought process, but if it breaks below this 89 kind of 60 zone, or it breaks above this 90-60 zone, boy oh boy, then it's going to be very exciting to trade dollar index pairs, gold pairs, etc. Speaking of gold, it's on support. You can see how it interacted with our 1890 zone, 1888 yesterday. This is a very important zone for gold to hold. I would love to see gold now break through these last 2 wick candles that we can see here on the 4-hour. 4-hour and 8-hour candles are probably the best time frames to be looking for in gold, and we'll continue to reiterate this. We're seeing a trough, a peak, a higher trough, a higher peak, and of course currently still a higher trough. So if we get the sequence of a new higher peak, I think we can easily take out these previous highs around 1910, and I'm looking for a 1910 break to bring us 1930 in gold. If we fail around this level and go underneath this 1880 zone, unfortunately we come all the way back down to the 1860. So there's some key levels here. We're at the precipice of the turnaround event. I'd be on the 2-hour charts and those other ones looking at these resistances such as the 1896. If it closes through that, I think day traders will get involved to try to push it to the 1903 level. Good luck everyone out there trading gold and silver. In terms of silver, we're not covering it today because gold chart is going to dictate what silver does. If gold moves ahead, silver will move with it. Silver is just incredibly muddled in terms of where it is in the chart. So I'm using gold as my silver compass, let's just say that. US oil continues to present. Man, this has been a great trade for the community. Congratulations, everybody. We're still going and we're still getting towards our eventual goals. What are our goals here on US oil? We've got 72 and we've got 75. Why do we have those? It's all about top-down analysis. You go over, you see the previous run. 72 had some problems. 75, the eventual goal is 75, 76. And after that, you know what? I think OPEC's going to come in and possibly damage this trade and possibly start to produce a little bit more barrels. We continuously see that US oil has been pushing off key levels. We've got here the 20 moving average on the 4-hour chart. You can see how it's interacted with that zone. Yesterday, we had a long leg doji followed by a decision candle. And since that decision candle's happened, we've continued to push higher. New peak being formed, exactly what we want to see. Let's go towards 72 with a series of course, I would love to see just this standard play out with 2 steps forward, 1 step back. It's acting incredibly technically right now. Good luck for black gold traders out there. Let's go to the markets. Let's talk about some short squeezes and then go into the indices and Tesla and others. And straight away, you'll see here that $60 price target was way too much for AMC yesterday. As we feared, money was flowing into other things. Of course, we had CLOV moving very, very hard. Clover was moving massively. It went past previous peaks and then, of course, pulled back to the peak. In fact, I'll show you guys right now. Let's just do it together. Here's CLOV. And what you'll notice is that this was kind of the old previous all-time high around $17-ish. It went really high, hit like a 25, just underneath 25, a key psychological zone, bounced all the way back down. And then from that previous peak, this is like AMC in some ways, it then retested and now it's ended at a very, very nice level of around 21. As we suspected yesterday, more money went into GME, and congratulations anyone that was on the channel and they were trading it through the session because it just stopped underneath our 350. As we suspected, it would go really close to this level, and that's great news for GME holders. People are back in the game here on GME, and money is going from AMC currently and squeezing out to all of these other stocks. That's what you've got to be concerned about as an AMC holder. This happened last time, and it kind of caused the end of the apes holding. So just be careful about that. Of course, any break past 350 for GME is going to sequence way higher, and AMC is just solidifying the $60 area. A break above $60 is going to bring us into the 70 territory. Continue to watch that session for the upside if that's what you are looking to do. Let's move over to Tesla. Tesla above 600, big strong candle in terms of what did happen. Then we moved up yesterday. Pre-market was super hot for Tesla, about 3.5%, like it was for all the hyper stocks. Maybe the market got a little bit carried away. It came back down to 600, found buying pressure, and I still think this is positive. We've got our trough, we've got our peak, we've got our higher trough, we've got our higher peak that's been formed. We've pulled back 2 moving averages. As long as the markets can hold, which they are currently in terms of indices, we should be on our way back towards 635, and then a break past 635, I believe, brings us 660, 666. So I don't really feel bad about Tesla right now in the markets, but it is less than ideal that we had a gap up that was so large yesterday with no follow-through action. That's not really what you want to see. Where was the follow-through action? IWM, the Russell 2000, continued to power on. Another nice candle. All-time highs here around 234.52. We are just underneath that at 232.89. We talked about the channel. We talked about the range. I still think this is looking incredibly strong right now. Hopefully we can go towards the 246. And this is the type of event or the type of thing that you want to be paying attention to. Hyper stocks seem to be back in rotation. They're doing the best in the market still. And this is the type of sector or indice that you want to see running when you're trading those hyper stocks. A lot of those are on fringe of the SP 500 or in the Russell themselves. So, of course, having this breakout is ideal for biotech, hyper stocks, those types of industries. Let's move over here to the US 100. Long leg doji on the futures. You'll see here we've got the movement down, the movement up. Big swing yesterday each way. Big open, big sell-off. Decent recovery. So what is this telling us? Indecision in what I think is a participation phase, hopefully now up to 14,000. It doesn't deter me, this type of candle and what we saw yesterday. I think coming back down, finding buy pressure around this previous resistance is always important. As soon as you find the buys, that's great. They're obviously indecisive right now, but if we go over to something like QQQ and you think about it, it wasn't that bad a daily close. Effectively, it opened up too much, came down, moved through the session, found buyer pressure near the end of the day. And when we have a look here at the 5-minute chart, you'll notice that it did find some pretty decent buy pressure. It was trying to move up and then just a little bit of sell-off near the end. But overall, I think not a negative day for the markets, just realistically another slow grind up. And the reason why this is all happening comes to the S&P 500, guys. It's very clear. It's not easy to make an all-time high. You know, we've got an all-time high over here. We tried to do it yesterday. Are there going to be bears there? Yes. Could it be a bear trap? Absolutely. Bears start selling up here. They feel good about it. They can clearly see that it's an all-time high and they start selling in. It makes sense that people are going to sell here. People are going to take profit. People see the all-time high. They might be fearful in the market. All sorts of things are going on in people's minds. However, it doesn't change the fact that we did see a recovery throughout the session. And when you have a look at this chart, you'll notice again, big buy wicks that are coming off here. This is symptomatic with a closure above that is going to occur. Why? Because we have buying pressure, and each time the bears try to get control of the market through these last two candles, they fail to do so. They fail to really convince us that, hey, these markets are weak. So once we close through, that could mean bigger explosions because there is this pent-up buyer demand that's coming through the markets right now. I also think that it didn't help yesterday that we had squeezes going all over the place, massive swings that really kind of worrying maybe Wall Street a little bit in terms of how unstable this market is. And then on top of that, you also had cryptocurrency getting crunched throughout the session. So I still think that reminding ourselves that we're at the all-time peaks, we're finding bear pressure here, it makes sense, but we're still rejecting it throughout the session is pretty strong. Once we get through this peak, then we can move towards the overall trend line, which we've got on the daily. But yeah, look at all this price action. It makes sense. Once we close, we move into the trend line. Might take quite a few days to get there, but I think it's overall positive here for the market still. And I'd say remain bullishly optimistic even at these resistances. It just the price action seems to be telling us that. Let's move over to Bitcoin. Of course, Bitcoin is the disappointment here. The cryptocurrency world is still in a lot of pain. And you can see the big triangle closeout here that everyone's probably now talking about. We did this on the live chat. We've talked about it quite a few times. Now, there are multiple ways of looking at this. Some people are saying it's a symmetrical triangle. You take around 2/3 of the distance, extrapolate that out, and that becomes the distance that you believe it's going to. This would call for around 26,000. Now, there are some people that are very negative, and they're saying, hey, it's a pennant. And it's fair enough. You could say it's a pennant based on this. Now, that's calling for $6,000. Maybe a little bit too insane right now. And that's not going to happen tomorrow. Obviously, it's going to take a long time to play out like this if this is indeed a larger pennant. I tend to just look at it from the perspective of we're still in a massive amount of FUD. We're still in a massive amount of fear in the markets. And if we think about that Wyckoff strategy or Wyckoff strategy or any kind of just general market psychology, what usually happens through a fearful market, and this happened usually in things like not the pandemic, but obviously global financial crises, is that you have a fearful low, then you often dead cat bounce, which is effectively what's happened here. Then you pull back down, then you start to decline over time. And that's usually followed up by a new low. And that new low is purely designed to take out stop losses, to take out margin that's purchased all the way through this area, and to fully utilize taking as much money as possible from the weak-minded trader or the trader that doesn't know what's going on or the investor that doesn't know what's going on. Remember, making a new low is an incredibly powerful fear device. Even if it's short-lived, you can take out a lot of stops. So what I'm thinking here is that we may actually breach 30,000 at some point, even with this candle yesterday with a bit of a rejection, which looks good. It needs to follow through. So unless it gets back above 34.2, I'm not even feeling bullish here for Bitcoin. It still looks relatively crappy. It's under 33K at the time of this recording. So if we get under like 30,000, where do we go? Do we go to one of these wicks, 28.2, 28.8, or even that 26? They're the kind of zones. I'm not going to pick the bottom here. I think that's probably mad trying to pick the bottom. If you're investing, then sure, there's probably investable levels throughout this, but I'm going to wait for our patented, let's call it lightning bolt technique. I'm going to wait for that change, and when we see that change, then I'll feel more comfortable. And in fact, I kind of almost want it to make a new low to prove to us that it is trapping. And if we see that, then we can be more sure that we're in accumulation, we're in that distribution, and we're ready now to probably start to find really good base here in Bitcoin and all other cryptocurrencies therefore, so that we can start to move up later on this year. Remember, this kind of happened back in 17. There was a weakness through the middle of the year, followed by a massive bull run at the end of the year. So there are some things there that could be positive here for Bitcoin. Anyway, I've warbled enough. If you enjoy this content, guys, please remember to subscribe, hit that like button, and we'll see you tonight, 1.5 hours before New York Open for the Wednesday session. Come join us. It's going to be a cracker of a day. Bye.